Hi, everyone. Wanted to give you a quick update after an eventful weekend of talks with China on tariff trade talks. We had an outcome that was significantly better than we were looking for. We're going to roll back tariffs on China imports to 30%. China's going to roll back tariffs on our imports to them to 10%. And the capital markets are responding extremely favorable. Stock markets up, interest rates up a little bit, gold down a little bit. All of this, though, is predicated on the idea that as the temperature drops between us and China, and we get additional trade deals like we saw with the UK last week, that this opens the door towards an economic future where there's more certainty, the idea of potentially even more growth on a go forward basis, and it lessens the risk of a recession. This is the scenario that the FOMC was actually talking about last week as Fed Chair Powell and the FOMC met, and they kept interest rates the same because the uncertainty over the future kept them from thinking they needed to either lower or raise interest rates at the present time. Fed Chair Powell mentioned in his post-meeting comments that with policies that can be changed as quickly as tariffs do, it's really hard for the Fed to think about what monetary policy should be for the next few months. So, bottom line, though, is this. The temperature is lower between the U.S. and China. We still have ongoing communications with our other trade allies. And importantly, as we look into Congress, tax reform is continuing to move forward. We did get word from the Treasury that we'll hit our debt ceiling in July, mid-July of this summer. As that occurs, that's more reason for the Fed to act on tax policy and the debt ceiling and maybe regulation. All of this is a positive. Uncertainty's down overall, and the capital markets like it. Thank you for listening.